Hi, it's Larry Gaines from Options on the Open. I wanted to review the action that we've had this past week on the market and give you a little bit of market analysis, but based on one major assumption, that the worst part of the Japanese nuclear crisis is now behind us. Once this is perceived by the markets and a sense of stability returns, then just keep a close eye on the charts. Now let's take a look at some of the charts. I'm going to go through the S&P 500, the Russell 2000, the Dow Jones, the Nasdaq, and Apple to show you a few chart patterns and to show you or give you an idea of where the markets are potentially headed. Now to do this, I'm going to use an interesting indicator that's been around for quite some time, and it's called the Andrews Pitchfork. This was originally called the median line study and is based around a center line named the median line here, and then using pivots to form the two outer bound lines. So basically it just gives you a good visual picture of where price moves and how it can basically move around a median line and gravitate up and down based on these lines and the patterns that they form. So the basic concept is you take the pivot low, and here's the point down here. At this point below here, this is the low of the markets back in March of 2009. Then you take the high, pivot point 2, and then you take the other low, pivot point 3, and you extend out, and this creates what they call the Andrews Pitchfork. But anyway, it gives you a good visual about where price has been and where price potentially will go. So looking at this chart, this is a weekly chart of the S&P 500 using the SPX. You can see here that we've had two corrections since this move up. Well, we had this major correction here, but I'm talking about since, midpoint of last year, July 10th, when we had this one major correction down. We had a turning point here. We had a lot of bank crisis in Europe, and we had a major sell-off here. So from this high to this low creates these 2 points to create the pivot or this Andrews Pitchfork. So here you can see the price lows. At this point in time, we had a 7.9% drawdown from high here to the low here. The markets held this lower band of the Andrews Pitchfork. Nice little trend line here. Headed back up. We had another high here that came right in November. We had a 4.41% correction. Held here above the down part of this line of the Andrews Pitchfork. Started moving back up towards the mean or median line here. And we had another high right here, which came in February. So now currently we've had this sell-off this past week based on a lot of it based on this nuclear crisis in Japan. So we had a correction down to 7.1%. So just looking at this weekly chart, it shows that the pattern looks like it has found some stability or support right here. And this 1249.81, the low of this down move here this last week, this will probably be support in the near term. It could definitely correct and test the support again. It probably will, but to me this looks like a fairly good support line that will probably hold, subject to Japan and that crisis being resolved and not escalating. So this is the weekly. Now let me switch over to the daily. Now here's the daily of the S&P 500. We had a lot of volume here on the sell-off, but it held right in here. And this support line also is a major support line back from 2008. If you go back on the weekly, you can see it. So we'll see how this holds up, but we'd like to see a break below or not above. Like to see a break above this downward trend line here to get the market moving back. So on Friday you can see that the market stopped here, so we could get a little retracement back, then back up, or you could retrace and test this 1249 again. So this is the S&P. Now the next chart I'll show you quickly is the Dow Jones Industrial. So let me put that up. And here's the Dow Jones Industrial. This is the weekly. Again, here's the Andrews Pitchfork with the low for the pivot point 1 was back in March of 09. The high correction low back in July. And then the extension of this indicator, the Andrews Pitchfork. So you can see how it's been moving within this range right here with the median line here and the lower boundary line here. So it came down on this correction, moved up, held right in here, moved up, held in here, and looks like it's held here as well. So this kind of coincides with the S&P 500. We'll see how well it does here, but it looks like this is a pretty good support area right here for the movement. So the next chart I'll show you is the Russell 2000. Now this is the Russell 2000, and this is also weekly. So using the same chart points, March of 09 for the low, pivot high here, pivot low here, Andrews Pitchfork, you can see the price pattern here is come in here between this median line and the bottom part of this pitchfork. So it gives you a good visual of where price is headed and where potential support lies based on this trend line here. So the Russell 2000 is a very good index to track because it's made up of very high beta stocks, a lot of the small cap stocks. And as the markets go down, the Russell 2000 tends to go down a lot harder and with much more on a much more extreme basis. And as the market turns and corrects to the back to the upside, it will go up the most as well. It'll go up the fastest based on these high beta stocks. So it's a really good chart or good index to follow for hints of where the market's headed. So you can see here it came down, and so far it's held support right in this level right here, which comes in around about $77 even. So I'm going to switch over to daily, show you that real quick. Now here's the daily chart of the Russell 2000, and I've added in volume and a couple little trend lines here, but here's a good look at a support line here. Comes in around 77.52 down to around 7,700. As per the weekly, we saw that 7,700 line showed good support. Here's the volume. You had some extreme volume here on the sell-off last Wednesday, or this was this was Tuesday, this was Wednesday. Wednesday had the highest volume, but you can see that it did not make new lows, so that's a very good indication of potential strength back up and potential support here at the low that was made on Tuesday. So you had higher volume, but you had a higher low. So then you had a nice solid candlestick here on the daily, and here it looks like you almost are in a position to break back above this trend line. So the Russell is a really good one to keep an eye on. We'll see if this support holds here, but it looks like good support for the time being. Could retest, but keep an eye on that. Now here's the Nasdaq. This is a weekly of the Nasdaq 100. Again, using the pivot point 1 down on the March 09 low, the high here back last year in July, and the low down here, which came in July. This actually was May high. So here's your pivot 2, pivot 3. Draw your extension, and you can see how the Nasdaq has been one to really kind of outperform on this move up, which the high-tech stocks tend to do. But you can see here where it made its high in February and had a really major sell-off here. And a lot of this has been attributed to Apple. So, but using this indicator, the Andrews Pitchfork, just to see price pattern, you can see that it has held around 21.88. So this looks to be some pretty good support that we could definitely retest again, but we'll see if it holds, and it looks like there's high probability that it will. So the last chart I'll show you is Apple, and as Apple goes, so goes the Nasdaq. So let's take a look at Apple. Now here's Apple on the weekly, and again March '09 low for the pivot 1, pivot 2, pivot 3, extension Andrews Pitchfork. You can see here this sell-off this past 2010 where it made lows in July. Here's a flash crash low there. Rebounded, broke above the median line here, almost got back up to the top of the pitchfork, came back down, and it looks here, if you look at the price pattern right now, there looks to be good support coming in around 320. You could make a case for down to around 315 or so, with an extreme low if it continues to sell off around 300. There was a lot of rumors coming out and flooding the market this week on Apple, so we'll see how it holds up. But Apple's the key to the Nasdaq and could be a leading indicator for the other markets as well. So right now 300 in that range to 290. Sometimes they can always overshoot, or we could hold right here and we could have seen the lows on Friday. So keep an eye on this, but as you can see that it could continue down here to around 320, 315 in this range if it gets down to the bottom of this trend line from the Andrews Pitchfork. So I hope this has helped. This helps you kind of get an idea of where the markets are, where they're potentially headed, and good luck next week during the week trading. If you'd like to learn more about option trading and the other technical indicators that we use in our trading model, please join me at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.